Hi friends, today we are going to discuss about the functional areas of financial management. Company finance is considered to be the major domain of financial management. The scope of the subject includes the institutions through which we are raising the finance, the decisions we need to take in financial management, that is capital structure decision, dividend decision, profit planning, depreciation policies, and the techniques we need to apply for interpretation and analysis, that is the ratio analysis, fund flow analysis, financial statement analysis. So it is a wider concept. It is the financial management is not simply the managing only the finance. It includes so many activities. And today we are going to discuss about the functional areas of financial management. Functional areas comprises of determining financial needs, selecting the sources of funds, financial analysis and interpretation, cost volume profit analysis, capital budgeting, working capital management, profit planning and control, and the dividend policy. We'll look after the functional areas one by one. First, determining financial needs. A finance manager is supposed to meet the financial needs of an enterprise. So, first he has to decide what is the need of the finance, that sufficient funds should be made available at all points of time so that the financial activities can be taken without any interruption. The company needs finance for various activities, that is for promotional expenses, production, selling, marketing, fixed capital, working capital. So likewise, the finance is needed for so many, we can say almost all the activities of the company. And the needs are differ from company to company and from activity to activity. A manufacturing concern may require more investment in fixed assets and lesser investments in working capital, whereas a trading concern may be requiring more amount for working capital requirements. And regarding when we take up the size of a unit, large scale companies will require more of working capital compared to a small scale unit. So, what is the requirement? Because if finance is mobilized more than the requirement, it has to be kept idle in the company, and idle fund leads to all the adverse activities in the company. So, finance should be available, it should be available sufficiently, and there should not be too excessive funds for the enterprise. Okay, that will also create some disturbances. So the need has to be determined, accordingly we can go for it. Selecting the source of funds. Once the need is been determined, according to the need, according to the purpose for which it is needed and how much it is needed, we can decide from where we can raise the fund. For example, if it is for a productive purpose, we can go for one source of fund. If it's an unproductive purpose, we can go for another source of fund. If it's a productive purpose, we can go for raising even the debt capital, because the productive activities will produce income again for the company. From that, it will be easier for the company to pay the interest. Whereas unproductive purpose, that is the slow growth activities. In that occasion, we cannot, that is, it is not advisable to raise debt capital, because the payment of interest is a commitment for the business. Sometimes we may find difficulties in paying of the interest. So we have to select the right source of fund. So what is the right source of fund? What type of activity? How much it is required? On the point at which it is required, and how to raise it. The long-term funds may be raised through owned capital and the borrowed capital, that is the equity capital, preference capital, debt capital, and the short-term funds may be raised through cash credit, overdraft facilities from commercial banks. Like that, we can go further. So we have to decide the right source, and from that source we have to raise the fund. Then next come the financial analysis and interpretation. That is, the financial reports, when it has been presented, some people may get a meaning from the statements we are supplying. Some people may not. So it has to be interpreted. For interpretation, we have to use the techniques. Okay, it is also coming under the financial management.